Okay, so we've just been out to the Forbidden City and here with my buddy Daryl Guppy. And just a quick recap over the last 3 days on what are the main differences, if any, trading with cryptos and the futures market on Xcoin platform, which Daryl's had a chance to look at and look at the patterns and look at the analysis and see whether you take the trade or go long or short, etc. So, Daryl, what's your view, having looked at some of those on the Xcoin platform?
Well, the good news is that classic technical analysis is very applicable on the Xcoin platform. There's no question about it. So you're running with standard MT4, you can apply the same range of indicators to work out trend direction and the probability of trends continuing. But there are some differences. So you can't really apply classic chart analysis. Now, by classic chart analysis, I mean pattern recognition, where you're using a straight edge trend line for a support resistance level,
Right.
a sloping trend line for a trend. But when those lines combine, you have a number of classic patterns: upward sloping triangle, downward sloping triangle, etc.
Double shoulders, etc.
Yeah,
right?
and we know what the outcomes of those are in terms of high probability,
Right.
and we use them to set targets. We see some of the same patterns occurring in the crypto space, but they are not meaningful. They are a coincidence rather than a correlation.
Okay.
So if I see the pattern occurring in an equity market, in an index market, then I can be fairly confident that A, the pattern will be reliable and develop as we expect. B, that I can measure the pattern and use a price projection to set a target, either upside or downside, and build a trade around that behaviour.
Right.
Foreign currency markets, not quite so transferable. And the reason is because foreign currency markets have a whole range of different players. There's not the same psychological bias that's sitting there. When I own a stock, I fall in love with it.
Oh,
If it treats me
sentiment,
properly, and it goes up, I'll be very, very happy. If it doesn't treat me properly, I'll cut it very, very quickly.
Absolutely.
Instant divorce, I can assure you. So we've all got a vested interest, a very close emotional interest. Foreign currency, there's all sorts of people trading foreign currency. I don't actually own it. So the psychological behaviour in an FX chart is different to that in an equity or index chart. So there are some similarities, but they're not exact.
So in the crypto space, as you're saying, that psychological trading, for want of better words, is
Not as strong.
I would say it's totally different.
The more you move down a derivative line, the more that the pricing structure is established by an algorithm,
Yes.
as distinct from human trading, for want of a better word. So it's less emotional in one way, so it's less psychological. And that's a key problem, because people will look at a crypto chart and say, there's a head and shoulder pattern, there is an upward sloping triangle pattern, and trade it as if it was, for instance, an equity chart or a classic pattern. It doesn't work like that.
No.
Sometimes it'll be okay, but it is coincidence, not correlation. And that's the biggest difference between trading on a crypto chart and trading a chart of a commodity for oil or gold or something similar.
So I have a slightly different view on that as well.
Good, that's why we can make money, because I can only make money if you believe that I'm wrong.
Okay, so here's my view. Because crypto in a lot of parts of the world is not as regulated like the equities and the currencies and all that, you have tons of these Telegram and WhatsApp groups manipulating, for want of better words, a following for what the big leaders are saying, and in that following, people buy or sell. And my view is there's a lot of these groups actually manipulating some of the prices out there.
I love manipulated markets.
Absolutely. That's why I think we should get in here. We could do business.
Because
But is it orchestrated insider dealing or manipulation?
No, it
Because
doesn't.
John McAfee, or dare I say it, is under serious investigation on these sorts of behaviors, by the way.
So let's be clear. Markets throughout the world,
Yes.
all instruments are manipulated to a greater or lesser degree.
Yeah, by large institutions and the big whales.
Of course,
That
of
is
course.
for sure. Yeah.
So the opportunity comes to be able to recognise when manipulation is taking place. Then you can make an informed decision about whether you will join that manipulation, the impact of it, or whether you will avoid that situation. So some of my most successful trades have come from manipulated markets where you've seen that manipulation is taking place and you go, okay, I'll join the big boys and I'll follow them along for a little while and I'll jump out when they jump out. And there are a range of chart analysis techniques that identify...
To follow the big boys.
That not so much follow the big boys, that will help you to identify when what you might call to protect ourselves against legal conditions. We call it informed trading.
Informed trading.
Not inside trading. That's totally illegal. Informed trading is another question.
But, yes, it is informed. You're right. There's a distinction there. So it's these groups, large groups, that actually say, right, at such and such date and time, we think this will happen, and everyone either dumps or buys.
Yeah, it's a pump and dump or a dump and pump.
Yeah.
Right? And the difference is pump and dump, you push the price up and then dump it. Dump and pump
Crypto
is where you push
is
the price
notorious with the pump and dumps in a very big way.
That's right.
How would you give people tips to say, look out for these sorts of psychological behaviors so you don't get yourself a cold?
The classic pattern that we use in that environment is a parabolic trend line. Now, we've got to be a bit careful here because the mathematical definition of parabolic is quite different to what we see on the chart. But many, many years ago, it was identified as a parabolic by McGee and its name is stuck. Basically, it's a line that goes like this. And the important point is that once you have 3 anchor points for that line, the positioning of the line does not change. But inevitably, over time, as each candle is added, it will move closer and closer to the line. The day in which it crosses that line, that's the day to sell out.
Sell out.
Because
when it's at its peak.
No, not at its peak. When it crosses the parabolic trend line.
Oh,
that might be halfway up, it might be at the top. The other key factor is that when the parabolic trend line goes vertical, that signals the absolute end of the trend. Because the next candle that's added to it will automatically move to the right of that vertical part of that line. You need to get out. Why? The retracement is normally in the order of 50 to 80%. So it's a great signal to go short.
It's huge.
But it's wonderful. It's great trading. I love them. When we see these patterns, it's sort of, please open the market. I want 24-hour markets. I'd love to trade this.
But you should do crypto. It's all 24 hours.
I understand.
It's all 24 hours.
So when you see these parabolic patterns develop, that's the signal. And that's a reliable transfer from classic charting analysis to the crypto market. And when we're looking at Bitcoin, go back 12, 18 months, when we had that very fast run up and then the collapse, that's a parabolic trend. And on CNBC, that's what we called. I said at the time, that's the parabolic trend. Look for a 50 to 80% retracement minimum.
And it was.
Yeah.
And it was.
And we made money.
You made money?
We made money.
Why did you call me? Anyway, that was some very good tips for all you ex-coiners out there. Look out for the parabolic trends, and if you're trading the 1 minute, 30 minutes or whatever, these also exist in there because the candles exist even down to that minor level, the trends, because the psychology of the traders generally follow that, be it 1 minute, 30 seconds, 1 hour. Look out for that. So that's a very good tip to adopt in your trading strategy from Daryl. Daryl, what else would you suggest the guys to look out for?
Just remember that uncommon results do not come from common thinking.
Very good statement. Uncommon results do not come from common thinking.
That's right. Everyone's looking at the same charts, everyone's using the same sorts of tools and reaching different conclusions, which is what we need to be able to make a market. As I said, the fact you disagree with me is tremendous. If I'm a bit smarter, I can make money out of you, or
vice versa. Correct. And that's how markets trade as well, obviously, with the big swings.
That's right.
Because you can't have everybody having the same analysis, really.
Otherwise, you go down to the corner store and buy something off the shelf for set price, for set value. So it's the conception of the difference in value that drives the market. Now, that means that we can track those changes in sentiment using a Guppy multiple moving average.
Right.
For those who aren't familiar with it, it's 2 groups of moving averages. It sounds simple, but it's a simple outcome of a much more complex environment.
Right.
So we have a long-term group that gives us the thinking of of what we call investors, for want of a better word,
Right.
convenient way of thinking. Doesn't matter whether it's a 1 minute chart, a 1 day chart, a 1 week chart for each candle. We still have this longer term thinking and shorter term thinking. Short term group, short term thinking traders. When we get compression simultaneously in both groups, it tells us that there is a moment of agreement about price and value. Now, in an active auction market, that agreement cannot continue for an extended time. So it will change. There will be a trend move coming out of that. The next step is, where is that trend move likely to be? Up or down? Do we go long or short? We can use GMMA to make a decision about that, and there's
Right.
a couple of, in my books, there's a couple of ways that we use GMMA to establish the probability of, say, an upside break or a downside break. In a mid-trend entry, we can say, look, it's coming back. The investor support is strong, a bit like an airbag in a crash. It expands and absorbs the fall,
Yep.
and then the rebound develops. So you can trade the rally rebound with confidence after that fall. So that becomes an important tool of establishing the direction of the trend, the probability of trend direction. You don't always get it correct, but it gives you a much better guide. And here's the other problem. You use Williams percentage R,
Yeah,
you use stochastics,
I use that. Yeah.
you use MACD,
Yeah.
you use RSI.
Yeah, and Bollies as well.
Yeah, why? They're all measuring the same thing.
Do you know
in
what?
pretty much the same way.
Half of it.
And they all
is-
agree.
Yes, half of it is just a, as you said, a psychology thing. When you hear someone say, "Oh, I use this and it works," so you put them all, and it becomes one big mess.
That's right.
And you focus on 2 or 3,
Yeah, but they're all measuring the same thing.
virtually the same.
In the
thing,
same
yeah.
way. So of course they're all
different
going to
time
give
bands and all that.
simultaneous signals.
Yeah.
Oh yes, that's great. Look, they're all saying go, 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 go. They can also be all wrong as well as all right. So what I prefer to do, instead of weight of
So your
evidence,
double moving averages is a better
the GMMA
measurement.
The GMMA,
GMMA,
is
yeah.
the GMMA, although I call it that, has very little to do with moving averages. What it catches is the fractional repetition in the market. So the crossover of the moving average is the least important part of that particular indicator. So I want indicators that are independently measuring the same thing. And when there's an agreement there, then I have much more confidence of my analysis. But if I have a group of indicators that are all measuring the same thing in pretty much the same way,
Yeah.
then actually I have less confidence. Just because every vehicle, every car we're in at the moment is doing 100 kilometres an hour and the speed limit is 60, doesn't mean they're right. It's the policeman on the side of the road who's measuring our
Who's
speed
measuring it,
independently.
Yeah. That's a
That's
good
the
analogy.
That's the answer I have to agree with.
Very good analogy. So there you have it. In the car with Daryl. It sounds like.
Not at 100 kilometres an hour, engaging traffic.
And whilst we were stopped by the police earlier on for I don't know what regular checks, as you said, but where can people buy your books from? And
Well,
your best book that they could use in terms of adopting some of the strategies in the crypto world as well.
the one that's most relevant for crypto trading is Guppy Trading.
Guppy trading.
The one that is really relevant is the one that I haven't finished writing yet, but which will be published, we hope, by the end of 2020. And we'll let people know when that's
Wow.
available. But in terms of buying my books, go to Amazon. It's the easiest way these days.
Amazon and Daryl Guppy. So look out for next year's book, but meanwhile, Guppy Trading is a good start for you guys. Look forward to seeing you again over the next few months, but that's goodbye from us. We are now going to take Daryl to the airport after 3 heavy days. Thank you very much. Last
No
words,
problem.
Daryl.
Last words. Trade well.
Trade well, trade safe. That's what I say.
Oh, trading well isn't always trading safe. Just trade well.
Trade well. Bye for now.